Foreclosure rates are not slowing down. They were up almost a quarter last month compared to September of last year.
Foreclosure rates are up 20% compared to a year ago, and nowhere more so than Florida.
Foreclosure rates are on the rise across the country, and Florida is one of the states leading the way. A U.S. foreclosure market report from Adams shows that about 1 in every 2,500 Florida housing units have a foreclosure filing. That's a 5% increase compared to August of last year. Our state ranked third behind only Nevada and South Carolina in foreclosure rates.
Florida foreclosure rates jumped almost a quarter in a single month compared to last year. We're talking about real families, real homes, real lives falling apart at a speed we haven't seen in over a decade. And the thing is, this isn't just Florida having a bad month. Foreclosure rates nationwide are up 20% from a year ago, but Florida is leading that charge. We're out front, setting the pace for a crisis nobody wants to admit is happening. Right now, 1 in every 2,500 Florida homes has a foreclosure filing attached to it. That puts us third worst in the entire country, sitting right behind Nevada and South Carolina.
So if you're waking up with us in Coral Springs, we are learning that you are home to some of the highest foreclosure rates in the country.
So looking at this Adams report that looked at the foreclosure rates, 18% higher than they were 1 year ago nationwide. It specifically looked at Lakeland, Ocala, and Cape Coral, some of the worst foreclosure rates in Florida.
The Adams report reveals foreclosures are up 18% nationwide compared to last year. But when you look at where the damage is concentrated, a pattern emerges that nobody's talking about. Lakeland, Ocala, Cape Coral, these Florida cities are posting some of the worst foreclosure rates in the entire state. Add Coral Springs to that list, now ranking among the highest foreclosure cities in the country. Notice what all these places have in common. They were the darlings of the pandemic migration boom. Cape Coral and Lakeland saw explosive population growth as remote workers flooded in from expensive coastal cities. Ocala marketed itself as affordable Florida living. Coral Springs was the prosperous Broward County suburb where middle-class families planted roots. These weren't struggling Rust Belt towns or economically depressed areas. These were thriving communities that became ground zero for the Florida dream. And now they're leading the foreclosure crisis. That's not coincidence. That's a systematic failure playing out in real time across the exact communities that grew the fastest and climbed the highest during COVID. What went up the quickest is now coming down the hardest.
Why do we think we're seeing an increase?
Well, I think there's three pressures that homeowners are experiencing. One is the cost of insurance. Homeowners insurance obviously remains incredibly high in Florida. The rate of growth has calmed down from just a few recent years ago, but it still is very, very expensive to insure a home in Florida. The second reason, property taxes. As property taxes have increased thanks to the underlying value of our real estate, the amount owed by property owners has increased, and we know that the state legislature and the Republicans and Governor DeSantis really want to go after local property taxes in the next legislative session. And I think the third reason here, in 2025, we are in a mortgage market which is much different than 5 years ago. So for home buyers or folks that refinance their mortgages in 2020, and have 5-year adjustable rate mortgages, those mortgages are coming due. They need to refinance, and they're experiencing much higher borrowing costs than they had just 5 years ago. And that adds to the total cost of carry of a home between insurance, taxes, and for those with adjustable rate mortgages coming due, now a much more expensive mortgage and a much higher monthly mortgage that they have to come up with.
Tom Hudson, senior economics editor with WLRN, just laid out the 3 pressure points crushing Florida homeowners. But let me translate what that actually means for families on the ground. Insurance costs in Florida aren't just high, they're catastrophic. Some coastal homeowners are paying $15,000, even $20,000 a year just to insure their property. That's over $1,500 a month before you even touch your mortgage payment. Then you've got property taxes climbing because home values shot up 40, 50, sometimes 60% during COVID. Your house might be worth less today than it was last year, but you're still paying taxes on that inflated assessment. And here's the time bomb nobody saw coming. Those 5-year adjustable rate mortgages from 2020 are resetting right now. People who locked in at 3% interest are being forced to refinance at 7%. That's not a small bump. That's potentially $1,000 more per month on the same loan. Stack all three together and you're looking at an extra $2,000 to $2,500 in monthly housing costs that most families simply cannot absorb. When Hudson says higher borrowing cost, what he really means is financial devastation happening in slow motion across the entire state. And here's what makes this whole situation even more insane. While families are drowning under these costs, Governor DeSantis is out there promising to eliminate property taxes entirely. Sounds heroic, right? Except he's not addressing the actual problems killing homeowners. Property taxes are visible and easy to campaign against, but they're not why foreclosure filings jumped 20% in 1 month. Families aren't losing their homes because of a tax bill they can calculate and budget for. They're losing them because their insurance company dropped them and the replacement policy costs triple what they paid last year. They're losing them because their mortgage just reset and added $12,000 annually to their housing costs overnight. But you won't hear the governor talking about insurance reform or mortgage market intervention because those fights are complicated and don't fit on a campaign mailer. Let me show you what this looks like in real numbers for an actual Florida family. Take a household that bought in Cape Coral in 2020 for $350,000. They put down 20%, got a 5-year ARM at 3.2%, and their monthly payment was about $1,200. Property taxes ran them $3,500 a year, so roughly $290 a month. Insurance back then? Maybe $1,800 annually, call it $150 a month. Total monthly housing cost, $1,640. Manageable on a combined household income of $85,000 a year. That same family today is facing a mortgage reset to 7% interest, which pushes their payment to $2,050. Their home insurance? Now $6,000 a year because 2 carriers left the state and they had to go with Citizens, Florida's insurer of last resort. That's $500 a month. Property taxes climbed to $4,800 because their home was assessed at peak 2022 values. Added up, and their monthly housing costs just jumped to $3,450. That's an extra $1,810 per month, or $21,720 more per year, on the exact same house with the exact same mortgage balance. Their income didn't go up $21,000. Nobody's income went up that much. So what happens? They start missing payments. Then they're in default. Then they're part of those foreclosure statistics we opened with. Now multiply that scenario across tens of thousands of Florida homeowners, and you start to see why places like Lakeland and Cape Coral are drowning. These cities grew so fast during COVID that a massive chunk of their housing stock was purchased or refinanced between 2019 and 2021. All those 5-year ARMs are resetting right now, all at once, creating a synchronized crisis that's hitting entire communities simultaneously. It's not spread out over a decade like normal market cycles. It's concentrated into a 12 to 18-month window, and we're right in the middle of it. But here's where the governor's response becomes almost tragic in its disconnect from reality. He keeps talking about property tax elimination like it's some magic bullet. But even if he succeeded tomorrow, it would save that Cape Coral family maybe $400 a month. Meanwhile, their insurance and mortgage costs went up $1,800 monthly. You're offering a Band-Aid to someone who needs emergency surgery. And the worst part? Eliminating property taxes doesn't just fail to solve the problem, it creates new ones. Because where does that revenue come from? Property taxes fund schools, police, fire departments, road maintenance, everything that makes a community livable. You can't just delete billions in local government revenue and pretend the services will magically continue. Comment below if you think the governor is genuinely trying to help or just making promises he knows he can't keep. I'm curious what you all think about this. The real story that's getting buried under all the political theater is how the insurance crisis specifically is gutting Florida's housing market in ways that go beyond just monthly payments. When insurance costs explode, it doesn't just hurt current homeowners. It kills the entire real estate transaction pipeline. Think about it. If you're trying to sell your home in Florida right now, your buyer needs to get insurance to close the loan. But if insurance quotes are coming back at $8,000, $10,000, $15,000 a year, buyers are walking away from deals. They're failing to qualify because the debt-to-income ratios don't work anymore once you factor in those insurance premiums. So homes are sitting on the market longer, prices are dropping, And suddenly homeowners who needed to sell to avoid foreclosure can't find buyers at any price that covers what they owe. This creates a doom loop that feeds on itself. More foreclosures mean more distressed inventory flooding the market. More inventory means lower prices. Lower prices mean more homeowners go underwater on their mortgages. More underwater homeowners mean more strategic defaults where people just walk away because they owe more than the house is worth. And round it goes, accelerating with each cycle. We saw this exact pattern in 2008. And anyone telling you this is nothing like 2008 either wasn't paying attention back then or has a vested interest in keeping you calm. Now, there are differences, and we should be honest about them. Lending standards today are way tighter than they were in 2006. The ninja loans, no income, no job, no assets, that fueled the last crash don't exist anymore. Most homeowners today have real equity in their properties, at least on paper. But here's the thing. Equity means nothing if you can't afford the monthly payment. You can have $150,000 in equity and still lose your home to foreclosure if you can't come up with an extra $2,000 a month. Equity doesn't pay bills. Cash flow does. And Florida homeowners are running out of cash flow. What's particularly disturbing is how this crisis is bifurcating Florida's housing market into two completely separate realities. If you're in Orlando, sitting on a property you bought before 2019 with significant equity, you're probably fine. Your insurance is expensive but manageable, you likely refinanced into a 30-year fixed rate when rates were low, and you've got enough equity cushion to ride out a downturn. But if you're in Cape Coral or Lakeland or Ocala, especially if you bought between 2020 and 2022, you're living in a completely different state. You're the one staring at foreclosure notices. You're the one trying to figure out if you should stop paying the mortgage and use that money to find a rental before your credit gets destroyed. You're the one realizing the Florida dream was a trap.